Welcome Money Team, my name is Ghost with Ghost Trades, and this is another edition of Supply and Demand, Volume 2. Today the topic will be about entries and exits. So just like with any investment in life, it's easy to hit the buy button. The difference between being a profitable investment and a not profitable investment is knowing when to buy and when to exit. So today I'll be going over all those key points, setups, best R&R trades that I look for, and hopefully I can help you guys with your path of becoming profitable traders. Let's go. So in this video, I'll be going over all the different ways that you can enter and exit trades using supply and demand. Throughout this series of videos, you guys will start understanding why I call myself a zone trader and why I don't find any risk reward entering a trade in between the zones. There are definitely more A-plus setups than others, just like with any other strategy, and definitely want to point those out to you guys. There are different factors that do influence your entries and exits, more catered towards the option side, but definitely could be useful you trading Forex or in equities. So the first example I want to go over is First Touch. This is not the most A-plus setup. Definitely is higher risk. I tend to always use less positions when I try to enter these trades. And when I find these entries to be the most effective is when there has been a time lapse between when the zone was created and the next time it's been revisited. So this is an example I'm going to go through with you guys, this entry. Definitely want to show you guys where to keep your stops, where to have your price targets, and when is the best time to enter these type of trades. So as you see here from volume 1, we take the low point of the trend reversal in the previous bearish candle, or if it's the same candle that created the low point, as long as it's the bearish candle, we use it as to close at the top of our demand zone. In this zone, you can see it was created on the 3rd of November. The next time it was revisited after the 10th was December 22nd. So on this entry here, definitely would be a prime candidate to test out this entry. So that now we know where we want to enter our trade. The next thing I look for is on the hourly. This is now on the hourly. I look to see where my price targets would be. As I was showing you before, I would look at support and resistance as a good place where I would take profit or move my stop losses. And as I was showing you, you want to find those areas where there's a lot of interest. So as you can see here, we got a lot of wicks that came here and touched this area. So I definitely would have made this. I would have definitely made this as my first price target. And the next one I would definitely look to make as my price target. Is where I would see the next area. So as you can see, we got this bounce here, this bounce here. So these would be good areas where you should take profit or move your stops up. So now let's go into the actual trade where I enter only on the 5 minutes to look at the price action. So now that we're on the 5-minute time frame, I would have all these levels all already marked out, and I'll be waiting. Most likely I would have been in puts. So the first thing I would have looked at once we got into here, if I was in puts, is to trim almost all out and leave runners. And now I would look at entering this trade right at once we cross the 375.05. Keep a 25 to 30 cent stop. Most likely I let the candle form on the 5 minute before I figure out if I'm going to get stopped out. I'd like to see a strong break on these levels, either out or in. So here, looking at this candle, yes, it's pretty average. So I definitely would have been mindful about that, but my stop would have been there. I would wait until at least the 5 minute rule on the candle. And the next thing I would look at is where we opened up on the next candle. So here it closed just underneath the demand level. And the next candle, as you can see, I would have probably been looking to take my loss on this one. But I would definitely watch first the first action after the candle open. As you can see, instantly shot up. So now as we're moving up and we get towards the first price target, I would keep my stop at the same place until we got to the first price target. So as we're going up, we got this little sell off here, and then we got back recovered. I would have kept my stop here, but once we got to right here, I'd move my stop right up to here and trim a little bit right there and have this as my next price target. As you can see, this trade would have definitely worked out. Here would have been the tough part of being able to just wait out at least the 5 minutes, or at least this candle, because instantly the next candle shot up. So that is for first touch. So bottom of demand, top of supply. One of my favorite go-to entries and exits for 2 reasons. One, much better R&R than the first touch. Also, if I do get stopped out at this trade, at this point of the zone, my mindset and my biasness quickly changes and I look for the other side of the trade. So let's get into a few examples. We had a few good examples just in the past week on SPY here. I am going on the hourly to show you this, just to let you guys know, like my previous example of first touch, that was on the daily time frame. But you could definitely apply the same principles that I used on the hourly, and that's as far as I would take it. So here, SPY was trading on January 25th, made this reversal right here as we bounced back pretty aggressively, and we went to pretty much our yearly high. So this area right here created this demand zone. So now let's go into the trade. Like the same steps as with the first touch, when I'm looking at zones, I look at where my price targets would go. So let's go in. We're already on the hourly, so pretty simple. Few different places. One would be right here. I did call this out live in Team Bull when I did take this trade. Also the top of the demand. So I'll show you guys how I played this point going on to the 5 minutes. As we had that gap down, pre-market with data, I seen that we already got into the demand zone. So at this point, I wasn't going to risk taking any calls unless we got above our demand zone. Here, didn't give a confirmation break, so definitely did not want to take calls or jump in calls heavy. I did take it for a gap fill, but for this example, I'm just going to go into my next trade of the day. So for top of the supply zone and bottom of the demand zone, I do tend to start my positions a little earlier, 5 to 10 cents average. And then I average into the position towards right to the bottom or the top of the zone. So as you can see here, the bottom of our zone was 393.56. I did start adding right about the 380, 370 position. And as you can see, as soon as we got even within 10 cents, not even 5 cents. So 5 cents, it bounced. And that was the low of the day. If I was going to put the stop loss where my stop loss was right at the break of this demand zone. So as you can see, we never came close to it. I never had a real chance to add a heavy position. And my next place that I would have added a heavy position was at the break, which you're going to see throughout this trade. So my price target on this trade, I kept it stop loss right at the break here and was the top of the demand. So that always is where you want to have one of your price targets, unless the demand zone is so big. Most times your price target should be the top of your demand zone, just because that would be the first key area where you'll see a lot of resistance. As you can see here, we got a nice little break. I did trim and we came all the way back. But as we broke here and we made the support here, I kept my stop slightly right here and I watched price action, and I wasn't going to add into my position unless we got a break above. So as you can see, I just let this trade ride out, and once we broke right here on this 5-minute candle, we came back down here. I added to my position just so I can get to the next price target, and I kept this as my stop now. Moved it all the way up. And that is how you play the bottom of a demand zone. So I'm going to walk you guys through playing the top of a supply zone. This was one of my favorite weeks to start the year. Was plenty of opportunities to keep hitting this trade. So the zone we're going to look at here was created on the 9th of February. As you know, we take the top of the trend reversal, previous bullish candle to close out the bottom of the supply zone. So here we're going to go through the progression we went through. This is the trade I'm going to be looking at. So on February 14th, as you guys probably remember, it was a really good price action day. I had my price targets all set out. So I had this as one of my key areas to trim. As you can see, got this, a lot of areas. And the next was right here, bottom of this buy. So that was my price targets for when we came back up towards this zone. As you can see in this candle, this was pre-market data. Let's go into the trade. 5 minutes. Okay. So as you can see here, much closer now. Pretty much the same principles as with playing the bottom of a demand zone. Same thing with top of a supply zone. As we were getting closer and closer to our rejection point. So this was all in pre-market. Now that we have established that this zone did not break, couldn't hold a candle over 5 minutes. And we did bounce, so the next time we got up there, I definitely test my puts always at the top of the supply. I wouldn't do first touch because we just rejected it, so most likely we'll go in deeper. So I had my stop set at 414.97. 5 minutes came in. As you can see right here, the volume still was average. Probably 15 cents. I did start adding earlier. Kept it as a 15-20 cents and a close below or above in this case for a stop out. As you can see, it opened up underneath the level at 414.67, so it kept me in the trade. And as you can see, we got a nice price action all the way down, and I got my trim right here. Moved my stops up. You can move it anywhere you would like. I just usually like to keep it here. Like to get my full risk reward. As you can see, we got to the next spot. And that's where I would move my stops right up here. And that's how you play the top of a supply zone. So the next entry I'm going to be speaking to you guys about is probably the most safest and most reliable entry there is, playing supply and demand. The reason I say this is because we're not trying to catch the top of the trend or the bottom of the trend. We're just simply allowing the price action to lead us into this trade. There's a few key elements you do have to pay attention to when you're trying to enter these type of trades. One, you want to make sure you check the volume on the breakouts and the rejection out of the zones. The second is you want to have a level inside the supply or the demand zone where it's got the resistance or support that it bounces or rejects off of, just so you're knowing that prices have been agreed upon and now that the reversal has started, and now you can pay attention to the volume on the breakouts. So let's get into this trade right here to kind of give you an example of an enter and exit. So this candle was created on the February 14th on the hourly on SPY. As you know, we take the bottom of the reversal trend, top of the body of the bearish candle or the opening print to create our demand zone. So we're going to be looking on probably throughout this whole price action while we're still keeping this demand zone. So now that we have this hourly, we're first going to plan our price targets. As you always know, plan where you're going to plan to fail. I'm going to look for my price targets. If we do bounce this demand zone, that's one right there I would look for. And the next one is probably right there. As you know, I'm looking for the best R&R. Definitely would look at these as my areas. As you can see, the top of the zone here is 410.5. Our first target would be 412.25, 413.7. So let's get into this trade. So there's a few things that we could do to play with enter and exit. You wanted to see that deep enough price action where it gets agreed upon to bounce out. It's the same thing as if it bounced from the bottom and say you missed the bottom tick. You can try to wait for the top. There's a few things I always watch when I'm looking at enter and exits. Volume, definitely key. But the next thing I would like to look at is the volume telling me if it's a break or not. If it doesn't have a high volume, more times I believe that we are going to get a retest, and this is what they call the break and retest. So you can watch that as well, doing the enter and exit. As you can see here, volume doesn't convince you that we are breaking out, and for rightfully so, we do come back. And once you get into here, the key of enter and exit is once we're out of this zone, you want to keep your stop right at the top of the zone. So as in this instance, 410.5. So you want to make sure you're clear. If price action leaves us, it's not our trade. But seeing this kind of example right here, the candle was very tiny, less than 1 million volume, more chances that we were probably going to come back. So if you just stayed patient, you could have got your re-entry right there. As soon as we touched in, keep yourself at 10, 15 cents. 5-minute close up below this zone. You would have got stopped out. And you would have watched this trade happen and you would have been in it all the way for your first price target. So like I said before, I'd like to keep my stop pretty much where it is when I first entered the trade until I get to at least my first price target. At this point, I would put it slightly above break even. Probably would have got stopped out on this trade before I got to our next price target. So as you can see, this enter and exit strategy can help a lot of people if you stay patient here as well. As you can see, we came back all the way down here. Volume didn't show us we were on a breakout. Could have came right back here as soon as we got back towards the zone. Kept your stop pretty close and tight. And as you can see in the next candle, we rocketed here. Same thing right here. Volume didn't really show us that we were breaking out. Could have waited for a close enough area right there. Kept your stop right there. And got to your price targets. This happens constantly throughout the charts, you guys will recognize them a lot more as you go through this video and start seeing these price actions. I do hope you guys do enjoy this video. I gave you guys pretty much 3 of my favorite setups. There are a few different things I do want to kind of go over with you guys. Some psychology, some price action. I'll definitely have that in the next volumes, in the next videos. I do hope you guys enjoyed this video. If you did find any education, any value in it, can you please like and subscribe? Definitely appreciate it.